Hi. Today the Fed raised interest rates 50 basis points. And I thought maybe people don't know what a basis point is. Now, since the very first thing I traded was options on T-bond futures, I know basis points pretty much my whole adult life, so I thought now would be a good time to do a financial video and do a little market recap at the end of it. So if you want to learn about basis points and talk about the market a little, follow me. Basis points are used in the financial world. They're one of those terms that early on makes you feel like you're an outsider instead of somebody who knows what's going on. They talk about basis points and you're unfamiliar with the term, so you feel like they're talking over your head. Really, basis points are just an easy way to talk about fractions of percentages. Now, we're all used to percentages. A percentage is 1% is equal to 1/100th. So if you've got 50%, it's 50 100ths or half. As far as interest rates, we can say, for example, that an annual 1% interest rate on $100 would give us $1 a year. Simple enough. So what happened is we got talking about fractions of percentages, and people had difficulty with that, so we decided to create basis points to talk about fractions of percentages. So when we get down to that 1%, we take that 1% and divide it by 100 again. So 1 basis point, or bip, is equal to 1/100th of 1%. In practice, that means it's the part after the decimal when you talk about interest rates. So if it's 5.23%, the 0.23 is 23 basis points. In our example of if we increase 1 bip above, 1 basis point equal 1/100th of $1, so that would be 1 penny more in interest over the year. Why do we use basis points? It makes changes in interest rates clear. If a mortgage rate went from 2.69% to 2.99%, and I tell you that rates are up 0.3%, you might think, okay, if I take 2.69%, I multiply it by 0.3%, which is times 1.003, so that gives me an answer of 2.7. So you're really saying rates went from 2.69 to 2.70. But if I tell you rates are up 30 basis points, there's no confusion. You'll know that the 30 is the part after the decimal. So I add the 0.69 and the 30, and I'll come up with 2.99 like I'm supposed to. In the case of the Fed, the first increase was 25 basis points. So that's 0.25%, or 1/4%. The next increase was 50 basis points. That's the one today. And people were afraid that it might be 75 basis points. So 50 basis points is 0.50, or 0.5%. And 75 basis points is 0.75%. So hopefully now, whenever you hear about basis points, your mind will automatically think, okay, that's the part after the decimal point when they're talking about percentages. And it can be used in more than interest rates. They'll use it talking about things like unemployment rates. They'll say the unemployment rates are up 120 basis points. And so when you hear that, 120 just means 120 hundredths, so it's 1.20. So I hope that clears up basis points. If you're still confused, address me in the comments. So let's move on and take a look at what happened with this 50 basis point increase. Now here's the daily chart, and you can see this low standing all by itself over here. That's the fear of Russia starting nuclear war low. And obviously that one didn't last very long. This is the big, strong rally we had, and we've been selling off ever since then. Now we came right down to where this low is, and you can see we did a fake breakout to the downside. It started out going down and ended the day closing higher. And then yesterday was higher, and today, as soon as the 50 basis point increase was announced, we were off to the races. We were up 125 points on the S&P. Advanced decline was about 4.5 to 1, so it was a really strong rally. So why did everybody rally? Because after the actual increase, Chairman Powell told us that we didn't have to worry about him getting super aggressive, and he thought he could do a soft landing. Of course, everybody knows that a soft landing in Fed speak means that we're in for a rough road ahead, because the Fed never does a soft landing. Only in their dreams can they do a soft landing. Now you can see we got a short signal. That's this red arrow here. We're waiting to break the nuclear threat low before we were certain it was a strong downtrend. Now we started the rally back up. So the question at this point is, do we continue to work in this range here? You can see that the 50% retracement is just above where we closed the day. We'll see if the market gaps higher and continues to move up, which would be the case if everyone thinks happy days are here again. It's time to buy tech, because eventually soft landing's not going to happen and they're going to have to lower interest rates. Or if we get back to the selling because everybody's worried about the recession down the road. So that's it for today. Hope you enjoyed this first financial update, and we'll see you again soon.